Alright, last TA video of the day. Let's do a quick update on Bitcoin. So before I do jump into the oscillators, momentum indicators, higher time frames, and talking about what I expect to pan out in the market, it's very important to let you know that a lot of this TA is hingent on what happens in the next 24 hours. Why is this? Because we've just completed our FOMC minute meeting. I have made a separate video that I am going to post immediately after this, probably 10-20 minutes after this is uploaded. It will be up, so I definitely recommend to check out my breakdown of everything you need to know for the FOMC minute meeting. One thing I would like to highlight over on my Twitter that I tweeted is once again something that's very hingent on the price action on Bitcoin, and this is the fact that if we look at the snapshots of the last two FOMC meetings, bear in mind, these were the proper official FOMC meetings. This was just the FOMC minute meeting, which has less weight, and I do believe you should take it with a grain of salt. But nonetheless, if we do look at the last two FOMC meetings, we pumped into the bad news. So here, this was when we had the meeting, we pumped. Here we had the meeting, we pumped. These were two separate dates, by the way. These are basically the last two FOMC meetings in the past couple of months. We pumped into the bad news and we dumped the day after, just like clockwork. And, you know, like I said here, this was a blatantly obvious bull trap. Both times, if you go back to my Twitter, I was calling for both of these to be a bull trap. And once again, I'm calling for the same thing now. And, you know, you might be wondering, well, we're not in too much of a bull trap in the first place. I mean, we're really not moving up too much since the most local bottom down here at 18,700. We're really just kind of chilling right now at 20,000. And once again, you know, if we do just kind of look at this, you can see that we have been in a crab market just trending sideways for quite some period in time right now. But we are sitting in an asymmetrical triangle. If you do know how these asymmetrical triangles slash bearish pennant, whatever you want to consider it, it is an asymmetrical triangle, which is also a pennant of this bearish pennant. We are about 70% of the way through this. Now, how these normally work is they break down, they consolidate, 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 and they either break to the upside or the downside, but they normally break within 70% of the trend. So what does that mean? We are about 70% of the way through this pattern already, and subsequently, I believe in the next 48 hours, we are going to make a decision. What do I think is going to happen? So there's two different scenarios that I've got for you, and within the next 48 hours, they both point to the same direction. That's what I want to quickly talk about before we do head over to the oscillators and talk about what is the momentum doing in the market right now. So just like the past couple of FOMC meetings, once again, take this with a grain of salt because we had a FOMC minute meeting, which has less weight than the FOMC meeting. This is more or less where they talk about, you know, monetary policy, where they talk about why they're doing what they're doing, how they see the economy right now, and they give us kind of tidbits and information that will help us navigate the next FOMC meeting. But with that being said, I do think if we are going to pump for Bitcoin, it has to be today. So scenario number one, the one that I find less likely, but I give about 40% probability to it happening. Scenario number one, we either move up to the top of this resistance of this asymmetrical triangle currently residing at roughly 21,000, and then we break down, or, you know, number 1B, should I say, we could even move up to this 618 Fibonacci that if we do draw from our most recent high all the way down to our low, you know, this is lengthened out, but this is simply from this high down to this low, and we are yielded with this 618 Fibonacci retracement. So if we do pump up to the 618 Fibonacci, confirm it as resistance, once again this is residing at 21,150, I think we'll be breaking down in the next 24 hours. So that is number one. Number one is hinging on the fact that if we do play out the previous FOMC fractal, that we could be moving up to this range of resistance round about the 618 fib up to, let's say we take about, you know, 4 to 12 hours to come up here. This would be meaning that this box here, this is not where I expect us to break to the upside of. I think if we're going to move up, we're going to get trapped before we break and exceed 21,150. And once again, scenario number one, if we do manage to move up to 21,150 and we break back down, this is going to be a failed move equals a fast move in the opposite direction. I always say this on my channel, you've got a pattern that you're consolidating, consolidating, consolidating in. If you move to the upside of it, if you break to the upside and then you quickly move back in the channel, you're going to have a failed move. And as I always say, once again, a failed move equals a fast move in the opposite direction. We would be subsequently moving back down to the downside very, very soon. So that's number one. Number one, And I should give you a price target for this. The price target is the same for both of them, and that is down here at the lows of this asymmetrical triangle. Now, there would be a pattern break of this. If I draw from the top down to the low down here, you can actually see if we break, I drew it a little bit wonky, let me straighten it up. So if we draw from here to here, let's say we break to the downside, because I'm saying in the next 24 to 48 hours. So let's say we come down here, and this would be the breakdown. This is actually 3 days, so let me move this over a bit. The breakdown target would be down here at 14,250, which lines up with my most bearish price target for Bitcoin. I personally think that Bitcoin's going to be bottoming between 16,500 to 14,000. Could potentially go to 12, but at this moment in time, those are the targets that I am planning on. So scenario number one, we continue with this FOMC fractal, we pump up to 21,000 or 21,150, and we break down. What is scenario number two, which has the same long-term outcome of what we're seeing right now? Scenario number two is we continue with this bearish divergence that I was talking about yesterday. Now, if you do want to head over to yesterday's video, because nothing has changed in that regard, I don't want to take up another 2-3 minutes explaining exactly what I explained 22 hours ago. So if you do want to know about the bearish divergence, the price targets of this, where you would need to break to invalidate it, be sure to head over to yesterday's video, Bitcoin bullish divergence. I'm not going to waste your time and lengthen this video for no reason. But scenario number two, we continue with the bearish divergence, which is currently in play, and we move back down to the downside ASAP. And with that, this could mean within the next 24 to 48 hours, we'll be falling to the downside of this asymmetrical triangle anyway. Now, if we do pull up, I'm going to leave the RSI, I'm going to leave everything else, because I covered everything on this in the bullish divergence video, and really since then, you know, Bitcoin in the past 24 hours is only up 0.5%, so nothing has changed in that regard. I don't want to take up another 2 minutes of your time regurgitating yesterday's information for the people who already watched it. So scenario number one and number two have the same long-term outcome. Scenario number one means we could move up to 21,150 in breakdown. Scenario number two is going to be that the short-term bearish divergence, which is currently playing out, where we've got these lows, lower lows, lower lows, and the oscillator is moving up. This would mean that the hidden bearish divergence is going to move down, and we're going to break down in scenario number two. So both scenarios point to a move down to the downside. Let's wrap up the video talking about what the oscillators and momentum indicators are saying in the lower time frames. So on the 4-hourly time frame, the squeeze bomb is heading to the downside. You can see that we are getting diminished returns on this. You've got a high, lower high, and this is, if we mark the top here, you can see if you cross-reference the most recent pump, this is still a lower high, and we're losing momentum in the market structure for the squeeze bomb. This is good for people like me who are sitting on the sidelines and looking forward to accumulating cheap Bitcoin. If you've been DCAing Bitcoin all the way down, then probably going to get a little bit cheaper, which I'm happy about. I know some people don't want to see Bitcoin go cheaper. I'm a long-term investor in Bitcoin. I'm very happy to buy at cheaper price targets. But with that being said, squeeze momentum indicator is heading to the downside. What is the money flow indicator saying? The money flow indicator went from oversold, you know, it was actually down here on the 30th of June at basically 8, completely oversold, you know, massively oversold, and then it broke back down, made a higher low at around about 19 on the money flow indicator, and exploded to the upside. It reached almost 76, meaning that on the money flow indicator, retail has massively run in to buy the dip. And as you can imagine, retail traders are normally wrong. It is the whales and smart money investors, institutions that you do want to be following. Before I do continue, you know, once again, I said the money flow indicator has come up, it has topped, and in my opinion, it's going to be moving back down to the downside, just like it did here, just like it did here, and just like it did here. But if you didn't watch my videos from the past couple of days, or if you're new to the channel, if this is your first video that you're watching of mine, first of all, warm welcome. I said that this is retail buying the dip. How do I know that this is retail buying the dip? Well, once again, if you haven't watched this video, if you do head over to my channel, click on videos, you will see this video 2 days ago, Bitcoin and Ethereum whale watching. We did a deep dive for 21 minutes into the on-chain metrics. Subsequently, we looked at what is retail doing, what are the retail wallets with, you know, less than 10 Bitcoin, what are the retail with 1 Bitcoin, what are the retail with 0.1 Bitcoin doing at this moment in time. All of those charts were reaching new all-time highs, meaning retail was buying the dip. And then we looked at whale alerts. We looked at what what the outflows were for Ethereum, what the outflows were for the whale wallets over on Bitcoin. And as you can imagine, just like I've summarized, all the whales, all the heavy institutions, all the big protocols like Celsius that are using their reserves to pay off their debt that they need to pay off, otherwise they're going to go bust. They are all dumping on retail. The money flow moving up is simply retail traders buying the dip. If you want to know more about that, then be sure to head over to Bitcoin and Ethereum whale watching. This is how we know that this is retail buying the dip. And wrapping up the video talking about the MACD on the 4-hourly time frame, we are heading to the upside, but we're still in a lower high formation, and you can really see we're starting to come down and slowly press into the moving average to the downside. And on this, I think we're going to break down very soon. I mean, you can see the amount of momentum stepping in on the MACD is completely mundane, and it's basically lollygagging to the downside. Now, the MACD is much more reactive of the price action than the squeeze momentum indicator. This really doesn't like to capitulate bullish, bearish, bullish, bearish, bullish, bearish, unlike the MACD does. And this is why often we catch these trends a lot better over on the squeeze momentum indicator. So pairing everything that we've just talked about together, basically all of your momentum indicators are calling for another flush to the downside, whether that means that we can pick up enough steam to head up to 21,000, 21,150. Is yet to be seen. I don't necessarily think it's going to happen. I put 40% weight into that possibility, and I put about a 60% probability into the likelihood of us not having a bounce at all and us just breaking to the downside. So with that being said, we talked about the market structure, we talked about this asymmetrical triangle. My short-term price prediction for this would be down here at 17,630. I do also have predictions round about 15k. This asymmetrical triangle breakdown target would be down here at 14,260. And while I was about to say while we are on the subject of this, but I'm just going to throw it in there because I do like to shamelessly plug my Twitter. As we were over here talking about the snapshot of the FOMC meetings, I would like to say, if you do want to follow me over on Twitter, it is here at 618_cowboy. My description will tell you about everything that I do. I share technical analysis, daily news, and memes. So if that is your thing, be sure to head over to at 618_cowboy. If you can't be bothered to type that in, simply click on the description of this YouTube video, head down, and you will find both my Twitter and my Discord. Now, if you're not already a member of the Discord community, be sure to head over to there. At this moment in time, we've got over 800 members in the community. So like I said, if you're not already part of the Cowboy family, be sure to head over to there. It is a great time, so I hope to see you over there. That is all I've got for you today, my friends. One last thing, I wasn't going to mention this, but we are seeing continuation in the dollar. The dollar is on an absolute rampage, just like we've been talking about for the past couple of weeks. This is where it gets kind of crazy, because this was, let's find the daily. So this was the shorter term time frame. I think we had this was the DXY on the daily. So you can look at the DXY on the daily and you'll see that we are breaking out of a cup and handle pattern that's been in place since the 12th of May 2022. The price target of this break up would be up here at 107.66 for the DXY. Seems bullish, right? But it's just a short-term bullish cup and handle. You know, what's the worst that can happen? When in doubt, zoom out, right? Let's head over to the dollar on the weekly time frame, and you will see that the dollar has been playing out a macro cup and handle since March of 2020. Since the pandemic scare, the dollar has created a rounding bottom and now is exploding to the upside. So if you think the dollar is overextended, which I would somewhat agree with, but if you think the dollar can't go up any further, it's been consolidating in this rounding bottom for 2 years now. More than 2 years, it's been rounding out at the bottom, and now, really only for the past 2 to 3 months, it has been rocketing to the upside. A very conservative price target for the dollar would be up here at the 1.618 Fibonacci extension. When we draw our not the extension, the retracement. So from our retracement from our high up here all the way down to our low, this is elongated out so you can see the price target now, but this would just be from this high down to this low. We are presented with your 1.618. We've been calling for this for a while, but from where we are now, this is about another 4% move to the upside for the dollar. And as you can imagine, the dollar has only been moving up a couple of percent every couple of days or so, and Bitcoin's been getting decimated because of that. So be super, super cautious if you're trading these markets right now. I'm hedging my bets to the downside. You know what I'm expecting. Scenario 1, 21,150 in a breakdown. Scenario 2, we just break down ASAP. So that's all I've got for you today. Hope you found some value in today's video. And as always, cowboy out, peace. And after I upload this FOMC meeting update with all you need to know. All I've got for you today, cowboy out, my friends. Peace.